how your balance sheet operations and temporary repos, how they affect the system and who they're helping. Clearly, they're mostly designed, as you said, to keep the Fed funds rate in the range you're looking for. But certainly the repo market is also used heavily by hedge funds and other Wall Street institutions. And so how would you explain to sort of Main Street why you're doing all this for that market, and how would you address criticism that it is helping mostly Wall Street along with everything else? Thank you.
Let me just stress that we have a very specific and important reason for caring about money market operations generally, and that just is that our monetary policy decisions are transmitted through the financial markets, through the money markets, into other financial markets and into broader financial conditions. So we care that money markets are operating smoothly, and they stopped operating smoothly briefly back in September, and so we acted. This is a one-time thing that we're doing to adjust the level of reserves so that the money markets will be able to operate smoothly on an ongoing basis. Repo markets are important because that's where Treasury securities, the purchase of Treasury securities, which is the way, part of the way the federal government is funding its operations, it's the way those are financed. So these are largely Treasury securities that have been purchased by dealers for distribution to end buyers to a substantial extent. That's what's going on in the Treasury repo market. So it's just financing for that. Now, again, we don't. That activity is a market activity. We're not looking to eliminate volatility or protect anybody from volatility at all. What we care about is that volatility in the repo market can affect the transmission of our policy decisions to federal funds rate, and that really is important for the public.
Nancy Marshall-Genzer with Marketplace. Chair Powell, is the Fed going to vote tomorrow on changes to the Volcker Rule restrictions on banks investing in venture capital funds? What can you tell us about what the Fed is considering and why make those changes?
Sure. So we will be looking tomorrow and voting on a new part of the existing Volcker Rule, and that is the covered fund provisions of the rule. And we'll be making a bunch of proposed revisions that we believe are faithful to both the letter and the spirit of the law. We're going to put those proposals out for public discussion, and we're going to listen carefully, as we always do, to public comments on those proposals. Again, we believe that they will be, and you'll see them tomorrow. Will be public. Will be publicly. I think we have a board meeting tomorrow to do that.
Funds, or are also you changing the rules for hedge funds and private equity funds?
It's covered funds. So it's that covered. It's not the proprietary trading part of Volcker. It's the covered funds part.
And is there a chance that banks could take this and run and maybe even get involved in mortgage-backed securities again, and risky investments?
We think that what we're doing is very consistent with safety and soundness, and absolutely consistent with the letter and spirit of the Volcker Rule. We'll be getting comments from people, and we'll be looking into that question among many others.